Yes, training people. So I hope you guys have gone through the theory questions,
Yes,
the
sir.
material which
Yes,
is
sir.
given. Yes. Any doubts? Anything which you need clarification from here or something like that? Fine. Let's get started with problems. Yeah. So let's begin with the problems. The first problem I'll read out. Please see. We'll start with very small problems, and then we'll go ahead with big problems. High Limited acquires all the shares of Low Limited on 31st March 25, on which date the balance sheets of the two companies are as under. Prepare CBS as on 31st March 25. Liabilities, equity shares of 10 each fully paid. Reserves, creditors. Assets, sundry assets, 100% shares in S Limited. Now, look, when you read the question, there are few important parameters which you'll have to capture in the first go. One is the date on which the shares are acquired. It is basically on this date. The shares are acquired on 31st March 25. And he is also asking you to prepare the balance sheet, that is consolidated balance sheet, on 31st March 25. So these two are very important for me. The third important thing which I need is how much stake am I purchasing in that new company? Okay. So these three are important parameters which I need. So considering these three, I would take it into my consolidation workings. Okay. So luckily in this problem, this being the first problem, they have acquired shares in Low Limited on 31st March 25. Consolidation is also happening on the same day. And he did not buy 60% or 70%, he has bought 100%. That means the child is 100% subsidiary for me. Okay, fully controlled child it is. So in this case, how do we consolidate is something we are going to see here. Okay. So I'll start with showing the answers in Excel for you. Yeah, I hope Excel is visible.
Yes, sir.
Always start with 3 bullet points. Number 1 is date of consolidation. Okay. Number 2 is date of control. Third is shareholding pattern. These 3 details are very critical for us. In this case, the date of consolidation is 31st of March 25, and date of control is also the same, 31st March 25. Shareholding pattern happens to be 100:0. Okay, make it a habit to write non-controlling interest share also side by side. Actually, in your books, you are supposed to write like this. Okay, but for my calculation sake, I'm going to split it and show it in 2 different cells. That's all. Okay, actually you're supposed to write like this, 100:0. Okay, but for my comfort of calculations, I'm going to take 100 in one cell and 0 in another cell. Next. So now let's go to step 1, net worth analysis of child. as on 31st March 25 with respect to also again the same 31st of March 25. Okay. So this is step 1. Start with particulars. Okay. And then have a broad capital profits column. And in the same way, revenue profits also. Okay. Can we go ahead?
Yes, sir.
So just a minute.
Yeah. Any doubts or can I go ahead?
So just a minute. I'll just last line again. Okay, sir. Thank you.
Yeah. So let's go ahead. So first thing in net worth analysis table, what you're supposed to take is we are going on a residuary basis. That is, we will take equity shares, reserves and all, and then calculate the net worth. So low limited's net worth is what we are calculating. Net worth analysis of subsidiary or child. So here equity share capital is there, reserves are also there. Beyond this, nothing else is there. Okay. They have some assets and liabilities. Assets and liabilities I am not bothered about. Okay. So let's pick that. Equity share capital. Capital profits are equity share capital on capital side comes to 2 lakhs. And then reserves and surplus, you need to take it based on the date of control. Okay. Today, the balance of reserves and surplus is 60,000. The 60,000 completely belongs to the existing shareholders only. I don't get anything actually. But when I purchase all those shares, it is going to be part of my capital profits because that is earned even before the date of investment by me. Okay. Hence, reserves and surplus 60,000 completely I'm going to take it here only. Okay. So beyond this, there are no other items with me. So now I can take totals. Okay. Total of C side and total of R side. I call it C side, R side. Okay. C side total is 2,60,000, R side is 0. So C side 2,60,000 is supposed to be split between two parties, that is holding company and non-controlling interest. Okay. Same way R side also. Since this being the first problem, let's put this structure correctly. Let's not change it at all. Okay. These totals, top single line, bottom double line. Okay. So 2,60,000 would be split between parent and non-controlling interest based on their shareholding pattern. Okay. So for parent, it's going to be 2,60,000 into 100 divided by 100. Okay. Same way for non-controlling interest, it's going to be 2,60,000 into 0 divided by 100. It is 0. Okay. So same way you are supposed to do even for revenue profits also. Revenue profits, it is 0 into 100 divided by 100 non-controlling interest is 0 into 0 divided by 100. Fairly speaking, need not mention it. But since this is the first problem, I'm just showing you how the template flows. Okay. Is that clear?
Yes, sir.
Yes, sir.
So what we have done till now is the capital profits total is split between parent and non-controlling interest in the ratio of their shareholding pattern. Same way, revenue profits total is split between parent and non-controlling interest in the ratio of their shareholding pattern. That's all. So with this, we are done. As I told earlier while we were discussing theory, this 2,60,000 goes to step 3, that is cost of control. Non-controlling interest capital profits and non-controlling interest revenue profits, these both go to step 2, that is your NCI table, network, this non-controlling interest amount, and then parent share of revenue profits, this goes to step 4. Okay, this first item alone goes to step 3. Okay, so with this, let us move ahead. Step 2 is non-controlling interest. Okay. In fact, you are supposed to mention it as non-controlling interest for consolidated balance sheet. Okay, in this A, share of capital profits from step 1, and then B, share of capital profits from step 1, share of revenue profits, sorry. Okay, so the value comes to it is actually 0 and 0. Okay, so take a total of it, that is NCI for CBS. If you are done, please tell me, we will go forward.
Yes, sir.
Sir.
Monica? Vinita?
Yes, sir.
All right.
Yes, sir.
Yes, yes. Next, number 3 is cost of control.
Sorry, sir, I'm having some connection lag. I think I already said I'd come.
Okay, no issues, no issues. That's fine, that's fine. Cost of control. Now, the first important information what we need is, what is the investment made by this guy, this parent company? Parent has actually invested 2 lakhs, but he got a share of capital profits from this entity, which is 2.6 lakhs. Okay, so you need to mention whether it is goodwill or capital reserve. Okay,
Capital.
there is a capital reserve. Okay, so let us write that investment by parent in child is 2 lakhs less share of capital profits from step 1. It is 2,60,000. So finally, what you get is either or a capital reserve. So if it is negative, it is capital reserve. So in this case, it is negative, hence a capital reserve. Yeah.
Yes, sir.
Yeah. So step 4. Step 4. Reserves for CBS. Okay. Take particulars and so many number of columns for so many number of reserves available. Okay. So if you look at the balance sheets given, he has just mentioned reserves. He did not give you breakup of what all reserves we have. So let us take it as other reserves because we have a capital reserve as well. Okay. Since we have a capital reserve, we will take these as other reserves and we will also mention one column for capital reserve. So particulars, other reserves and capital reserve. Okay. So to start with, parents' own reserves. Okay. So other reserves are there with the parent. You can take those. Okay. Other reserves of parent are 1 lakh and it does not have any capital reserve. Share of revenue profits from child. We don't have any share of revenue profits here. If you see, this is the value 0, but capital reserve we did get. Okay. So yeah. So revenue profits, share of revenue profits from child is 0. And capital reserve I did get. In fact, this is supposed to be mentioned as a separate line. Okay. Capital reserve from step 3. Okay. That's it. Now we can take totals and a grand total. Any doubts before we go forward?
No, sir.
No, sir.
All right. So let's get ahead with the last part, that is balance sheet. Okay. So step 5 is CBS. Particulars and amount. Okay. Start with assets. Assets, if you see, you are supposed to take both parent and child together. It's going to be 4,80,000 plus 2,60,000 comes to 7,40,000. Okay. So sundry assets. $7,40,000. Okay. Beyond that, there is nothing else here. You might ask, sir, will I not take investment in shares in child? We will not take because this is already considered and you have arrived at something called as share of your capital profit. Okay, so this gets knocked off against these two numbers. These two numbers, this gets knocked off against. Okay, hence there would not be any investment in shares of child. Okay, so total is 7,40,000. That's it. Now coming down, you have equity and liabilities. Equity and liabilities, if you see, you have equity share capital, which is only for the parent you are supposed to take. Recollect our template which I have shared. Look through the template which I have shared. Only parents' equity share capital is supposed to be taken. Child's will not be taken, should not be taken as well. Reason is this 2 lakhs is already considered in step 3. Is already considered in step 3. It got adjusted. So I need not take it at all. So it is only 5 lakhs. And reserves, I have already calculated step 4. Whatever is there in step 4, that's my reserves. Non-controlling interest as per step 2. And then lastly, you would take any other liabilities which are there. Here we have only creditors for 80,000. So equity share capital is 5 lakhs. Then reserves for CBS is already calculated, 1,60,000. Non-controlling interest is also calculated, but of no use. Here it is 0. Okay. And then you have, you don't have any other non-current liabilities. You just have only creditors, which is current liabilities. Current liabilities, the value what you have is just 80,000. So if you total up all these, it's the same 7,40,000. Any doubts? Feel free to ask. Since these are introductory problems, I'm doing it really slow. Babu Vijay Reddy, Yatlagi Baku. That option is left for you to open, because if you would like to ask anything, you can point out at that space and discuss. All right. I hope you guys are done. Can we go ahead?
Yes, sir.
All right. So slowly the problems keep changing. Okay. Yeah. So first problem, we have seen what to do if it is 100% subsidiary. Second problem is where if it is 60% subsidiary. Okay. Balance sheet as of 31st March 25 is as under. Prepare CBS as on the same date. So date of consolidation and date of control, both are the same dates. Then liabilities, if you see. Yeah, Monica.
So you had mentioned that CBS will be done for the first time you're doing consolidation, right?
I didn't get you once again.
CBS is usually done when we're doing consolidation for the first time, correct?
Yeah.
So in this case, so in the first case, they had mentioned that it has been taken over, etc., on this particular date. But in this case, they have not mentioned anything. So how do we know that it's the first we are doing consolidation for the first time?
No. See, I'll tell you what. The problems in CA final are only first consolidation events. Even after the first consolidation event also, we will keep preparing consolidated financial statements thereafter. But
Right.
that is very easy. That is very easy because already the initial adjustments are already incorporated. There is nothing new for us. It's
Okay.
only going to be revenue profits which are supposed to be added for this consolidation.
Okay.
So that would not be difficult at all. Only for the first consolidation event, it would be difficult for us to split the revenue profits, capital profits, and all that stuff.
Okay. So the sums which we have are
Are
going to be
only
the
first
first
consolidation
consol
events.
events.
Yeah,
Okay,
first consolidation events. That's all.
Okay. Okay.
Yeah. Yeah. Second problem. Balance sheets as at 31st March 25 are given under prepare CBS as on the same date. Equity shares of 10 each fully paid, reserves, creditors, sundry assets, 60% shares in S Limited. I bought for 1,10,000. That's all. Beyond this, no other information given. Okay. Now, here, your date of consolidation, date of control, shareholding pattern, all that three items, whatever we have done earlier, would come in as the same. The only difference between this problem and previous problem is here you are purchasing 60% of the shares, whereas in the previous problem it is 100% of the shares. Okay, so that difference is something which you are supposed to pick up. So let's get into the solution. So date of consolidation is 31st March 25. Date of control is 31st March 25. Shareholding pattern is 60 and 40. Okay. So equity share capital of, so let us start with the first step, that is net worth analysis of child as on 31st March 25 with respect to also the same date, 31st March 25. So take particulars in two columns, broad columns, particulars, capital profits, revenue profits. In that, start with equity share capital. Yeah. So equity share capital of Q Limited is 2 lakhs. The child is 2 lakhs. Take the same 2 lakhs. Reserves and surplus is 60,000. Take the same 60,000 and take totals. Okay. Then from the 2,60,000, take off two parts, parent and non-controlling interest, revenue profits as well, parent and non-controlling interest. So out of 2,60,000, parent has got 60% and non-controlling interest has got 40%. So in that ratio, we are going to split and show it is 1,56,000 and 1,04,000, and then revenue profit 0. Let me know if you guys are done with first step. And if you are confident, please go ahead to second step. I would like to participate on your own.
Yes.
If you are done with first step, go ahead and do the second step. There is nothing which can stop you. You can go ahead and do for yourself. I want that solo performance to happen right from the classroom. Only then you get trained for your examination. If you are done with first step, let's go ahead to second step. Second step is non-controlling interest for CBS. In that, there are two things which you are supposed to take. One is share of capital profits from step 1. Second is share of revenue profits from step 1. Share of capital profits is 1,04,000. Share of revenue profits is 0. Total comes to 1,04,000. That's for, and that's your NCI for CBS, non-controlling interest for CBS. Over people?
Yes, sir.
Yeah.
Yes, sir.
Then cost of control, investment by parent in child is only 1,10,000 if I'm not wrong. And share of capital profits from step 1 is 1,56,000. Hence, there is a capital reserve of 46,000. Okay. Then reserves for CBS, take particulars and other reserves and capital reserve. Okay. Parent company has got 1 lakh of other reserves. Take it. It does not have any capital reserve. Leave it off. Share of revenue profits from child is 0. Capital reserve from step 3 is 46,000. Okay. So all put together, your reserves for CBS is 1,46,000. After that, go ahead for CBS. So CBS sundry assets is 5,70,000 plus 2,60,000. 8,30,000. That's it. Beyond this, nothing else comes. Beyond this, nothing else comes. Equity share capital is 5 lakhs for parent. Reserves for CBS is 1,46,000. Non-controlling interest is 1,04,000. Current liabilities, that is creditors, you have 80,000. With that, your balance sheet gets tallied. Any doubts? Please feel free to ask. Otherwise, I'll move forward.
Excuse me, sir.
Yes.
So the sundry assets, 8,30,000. So the sundry assets of parent is 5 lakhs.
Sundry assets of parent is 5,70,000 and child is
Plus,
2 lakh.
okay.
Okay.
Okay, got it.
Both together is what we have got there.
Okay, got it.
Guys are done. We'll move forward.
Yes, sir. Done, sir.
Done, sir.
Yes, sir.
So let's move to third question. Balance sheet as at 31st March 25 are as under. Prepare CBS as on 31st March 25. That means again, he did not specifically mention on which date he has purchased. Let us see whether that information is given. Otherwise, we'll assume that it is purchased also on 31st March 25 only. Equity shares of 10 each fully paid. Reserves, creditors, total. Assets, sundry assets. 75% shares in S Limited at cost on 31st March 25. That means he has purchased on the same date. The new learning for you here is preliminary expenses.
Sir, background disturbance is coming. Sir,
Background
disturbance.
disturbance.
Mic adjustment, I think.
One second. Is that good now? Is it
Yes,
okay?
sir. Yes, sir.
Yeah. So preliminary expense is something new which you are going to learn in this question. What if we have preliminary expenses? How do I deal with it? So as I told you earlier, if there is any preliminary expense, this is something which is incurred by the child even before the date of control. And these expenses are supposed to be considered as, these items are supposed to be considered as part of net worth. And this should be deducted out of the net worth of child. Okay. So let's go ahead and do. But for that, there is nothing new which you are going to learn in this.
So the disturbance is still coming on and off.
Let me check. Now?
So now it's clear, but then while you're talking, that's when it comes.
Okay. Okay. Let me see. Let me see. So date of consolidation is 31st March 25. Date of control, he has specifically stated it as 31st March 25. Shareholding pattern, he has stated that he has purchased 75%. Okay. And non-controlling interest is 25% in such case. Okay. And then equity share capital, you have 2 lakhs, if I'm not wrong. Yes. And reserves, it is mentioned as 50,000. Everything goes on seaside only. Apart from this, you have preliminary expenses, most important.
So when you are using keypad,
It's
sound will come in, sir.
can't hear, sir.
When you use the keypad, you are not able to hear at all.
Some barbar sounding coming. I think వైర్ మూవ్ అవుతుంటే సౌండ్ వస్తున్నట్టుంది సార్.
One second. It has got no connection right now. Let me see. So preliminary expense given is 6,000. Now, do you still hear any sound?
No, okay సార్. No sound.
నన్ను సాటిస్ఫై చేయడానికి చెప్పొద్దు, తప్ప ఎవరి చెప్పాను పర్లేదు, నేను కరెక్ట్ చేసుకుంటా. If it is still troubling you, let me know.
No, no disturbance, sir. No,
Okay, fine. Yeah. So let's go ahead. So 2,44,000 is the total capital profits what we have, and revenue profits is 0. Okay. So in the third problem, what is that new you have learned is only about preliminary expenses. Okay. And this would be distributed, allocated to parent and child in the ratio of 70-25, 75-25. That is their shareholding pattern. Is that clear?
Yes, sir.
Yeah. So now we can go ahead with step 2, non-controlling interest for CBS. Share of capital profits from step 1 is 61,000. Share of revenue profits is 0. Total comes to 61,000 only. And then cost of control, investment by parent in child. We are supposed to see how much they have invested. The parent has invested 2,44,000. And share of capital profits is 1,83,000. Hence, we have got a goodwill here. Hence, we have got a goodwill here. Okay, people?
Yes, sir.
Yes, sir.
Yes. So goodwill is 61,000. Next, let's go ahead with reserves for CBS. So parents own reserves. If you see, parents have got 1 lakh of reserves, other reserves. There is no capital reserve at all. When there is no capital reserve, don't mention that column. For me, it is formula driven. That's why I'll have it, but you don't need to have it. Okay. So other reserves are only there. Apart from that, share of revenue profits from child, nothing has come, and capital reserve is not there. So you need not mention anything about capital reserve. This item you need not take. So it is just 1 lakh of other reserves what you have. Okay. So 1 lakh is your reserves for CBS. That's it. Then last step, CBS, consolidated balance sheet. Sundry assets we are supposed to take from the both the companies. It is 4,36,000 plus 3,04,000. It comes to 7,40,000. Okay. Apart from that, nothing else comes. Reason being, apart from sundry assets, you only have investment in child. Apart from that, preliminary expenses. Investment in child is used in step 3. Preliminary expenses are taken to step 1. So these are already consumed into our workings. So we don't have this value at all right now. Okay. So let us close this off. Okay. So sundry assets is just 7,40,000. Now start with equity and liabilities. Equity share capital of parent alone has to be taken. Parent alone is 5 lakhs. Okay. And apart from that, reserves are supposed to be taken, which is 1 lakh. And non-controlling interest comes in. Okay. Reserves is 1 lakh. Non-controlling interest is 61,000. Apart from that, you should also take creditors of both the companies. Creditors of both the companies, because liabilities, outside liabilities, you should take in full. Okay. 80,000 plus 60,000, 1,40,000.
Goodwill is there, sir.
Yeah, goodwill is there. All right. Yeah. Sorry, my mistake. So we have goodwill. Please take it on the asset side. Goodwill is 61,000. Okay. So 61,000 is goodwill. So both the places, that's it. If you are done, we'll move to next problem.
Yes, sir. Done.
Others? Else?
Done, sir.
Okay. So slowly the questions pattern is slightly changing. Fourth question, please see. Balance sheets as at 31st March 25 is given. Equity shares of 10 each, reserves, creditors, P&L account. This is not sorrow dry, it is sundry. Okay. Sundry assets 3 lakhs and 1 lakh. 60% shares in S Limited. Current assets total. Okay. Com Limited acquired shares on 1st April 24, on which date General reserve and profit and loss account of Go Limited showed balances of 40,000 and 8,000 respectively. Prepare consolidated balance sheet as on 31st March 25. So slightly he's increasing the depth. The question depth is increasing. Now he's stating he purchased 60% shares in subsidiary, but the date on which he has actually purchased is on 1st of April 2024. Okay. And you are right now consolidating on 31st March 25. That means after control, 1 year passed and then you are consolidating. Okay. So whatever profits are earned after the date of control will fall as part of revenue profits, and whatever profits are already there in the subsidiary as on the date of control will be considered as capital profits. Are you guys able to follow? Hello?
Yes, sir.
Yes, sir.
Everybody?
Yes, sir.
Okay, right. So what we need to understand is, while doing net worth analysis table, this part is very important. My date of consolidation is 31st March 25, but my date of control is not 31st March 25, it is 1st of April 24. And he has also stated the balances of general reserve and P&L on this particular date, that is 1st April 24. He has directly told me that they were 40,000 and 8,000 at that point of time. Okay. And next important thing what you need to observe is, reserves is basically nothing but your general reserve. That's what you need to understand here. Because he told it is reserves, that's all. Reserves is 50,000 for subsidiary. This is when on 31st March 25. But on 1st April, he says reserves had a balance of 40,000. What does that mean? What does that mean? How did it increase from 40,000 to 50,000?
Earned during this period.
Earned or transferred from P&L? Hello?
Yes, sir.
It is actually transferred during the period. Agreed or not? So from 40,000, if it has increased to 50,000 this year, it is basically transferred during the current year.
Okay.
Okay. So the transfer is something which you need to understand. That means I had a balance of 8,000 rupees in the beginning of the year that has become 35,000 at the end of the year in P&L. How did it become 35,000? After earning so much and transferring 10,000 to general reserve, it became 35,000.
Okay, sir.
So you need to observe all those inputs and then prepare. So all that information is hidden. He will not directly tell you at all. You need to understand. You need to understand. So from 40,000, it has become 50,000. That means the 10,000 increase is basically nothing but transfer of profits to reserves in the current period. Okay. So this is one important aspect which you need to follow. And then we will have totals in revenue profit side also, along with capital profits in this problem. Okay. So let's start with the solution.
Sir,
Yes, come on.
is it okay if you can give a note on this at the end of the sum?
Sure, I'll do that. Don't worry. Anyways, going forward, all problems will be like this only.
Okay.
First problem, no, that's why you'll feel like that. But after that, you'll get habituated. Don't worry.
Okay, sir.
Yeah. So 31st March 25 is the date of consolidation. Start with the 3 bullet points required. First bullet point is date of consolidation, 31st March 25. Second bullet point is 1st of April 24. And shareholding pattern is 60-40. Okay.
Yes, sir.
Yes, sir.
So start with first step, that is net worth analysis of child as on 31st March 2025 with respect to 1st of April 24. Most important, these dates are. Okay. So start with equity share capital. Equity share capital is how much? It is 2 lakhs. Take 2 lakhs. Take general reserve. Okay. Below that, in that, beside that, write working note 1. Okay. After that, P&L, working note 2. Okay. So don't take anything for now here. We will do the workings and then come down. Leave some 10 line space after P&L, whatever you have written. Okay. And come down. Start with working note 1. Analysis of general reserve. Okay. In this, write down balance as on 1st of April 24. He has mentioned that it is 40,000. Okay. This is given. Okay. Closing balance as on 31st March 25. This is also given. How much? 50,000. That means current year transfer from P&L. This is balancing figure. Is basically 50,000 minus 40,000. Okay. Now tell me, where should I take 40,000? What I'm going to do is I'm going to split this 50,000 closing balance as on the balance sheet date with respect to date of control and after date of control. So up to date of control, is that a profit earned out of my investment? Keep responding. Hello.
No, sir. No, sir.
No, that means this 40,000 is basically capital profit, yes or no?
Yes, sir.
Hence mention C. This 10,000 of revenue profits, this 10,000 is actually earned by the company and transferred after my date of control to general reserve. Hence, this is basically a revenue profit earned by the company. Agreed or not?
Yes, sir.
Yes, sir.
Yeah. So it is 40,000 which should go to C side and 10,000 should go to R side. Okay. So now go back to your table. In C side, take 40,000. R side, take 10,000. Is that clear?
Yes, sir.
Yes, sir.
Now, Same way you should also analyze for P&L. Okay. So working note 2 after that. Analysis of P&L. Balance as on 1/4/24 is given. How much? 8,000.
Yes, sir.
Closing balance is also given
35,000.
35,000. Thank you. Okay. Now don't be in a hurry and tell current year earned is 27,000. No. Okay. Current year earnings is basically a balancing figure for me, but current year transfer to general reserve is known already. It's given. It's hidden info. Okay, which is 10,000. Yes or no?
Yes, sir.
Now you would get a doubt. Sir, why can't a company transfer 10,000 out of opening profits, sir? First of all, you don't have 10,000 there.
Yes, sir.
Second, even if it was there, you cannot assume that it is done out of opening balance, because general reserve transfer is something which is done after earning some profits in the current year. So we will go only by the time in which it was transferred rather than the value from which it is transferred. Okay. So right now he has transferred 10,000 to general reserve in the current year. That means it is out of the current year profits he has transferred.
Yes,
You cannot go back and presume that no, 8,000 is transferred from C side, 2,000 is only transferred from R side. No such logics. Okay. If it is transferred on 1/4/24 itself, please take that it is 10,000 which is taken from opening balance. No wrong. But if it is after 1/4/24, don't even raise questions about the 10,000. It is transferred only out of current year profits. Okay. So that's your understanding here. Now, what is the amount of profit made during the current year? Current year earnings is how much?
17.
Yeah,
17,000.
17,000. Very simple. The number whatever you pick here, the total of all these three numbers should be equal to 35,000. So it's going to be this minus this and this. It is 37,000 which is earned during the current year. Am I making sense? Hello?
Okay.
Sir, can you explain once more?
I'll explain once again. Now what he is stating is he has got a balance of 8,000 rupees in the beginning. He earned something, I don't know. But he spent that 10,000 rupees in the current year. That is, he has transferred 10,000 rupees to general reserve. After doing all these transactions, he is left with a balance of 35,000. Okay. So how do I calculate this balancing figure? Balancing figure is basically 35,000 minus net off of 8,000 and 10,000. Is that clear?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. Okay. So this is your balancing figure. Now, this 8,000, where should I take? C side or R side in P&L analysis?
C side.
C side. Very good. 37,000, where should I take? Current year earning? No, it is earned after 1st of April 24.
Sir. R side.
R side. 10,000 is also transferred after 1st of April 24. Hence, it is also R side.
Sir.
Now, what you would do is you would take 8,000 on C side and take net of these two on R side, because both are R only, no. Hence, net of these two, 27,000 you will take on R side. Is that clear, everybody?
Yes, sir. Yes, sir.
Yes, sir.
Yes, sir.
You are able to follow, or you want me to explain this once again?
Sir, 37,000. I'm still
You are not able to understand this 37,000. No problem. you do one thing. This 37,000, you put it here. Okay. All this readily available information you first take. Okay. Always this is the simple logic. Is equal to this minus sum of whatever already information you have. That means, you know, 8,000 was there in the beginning, but out of that 8,000, it was not paid. 10,000 is actually transferred.
So we earned something.
Yeah, we earned something such that out of which 10,000 is transferred. How much is that transferred? How much is that earned? Out of that earning, and along with the 8,000, I have 35,000 balance.
Okay.
How much is it?
Got it.
Yeah.
Thank you.
Yeah. Okay. So P&L, if you take, it is just 8,000 here, and here it is going to be this and this. So your checkpoint is simple. You have got two numbers here. No, the sum of these two should be equal to your balance sheet number. Did you understand?
Yes, sir.
If this goes wrong, that means you have gone wrong somewhere. Doesn't mean if it alone matches, your solution is correct also. As we go to other problems, you will understand that. But for now, a very simple checkpoint for you is, the total of your capital profits and revenue profits together should be equal to your balance sheet profit as on 31st March. Clear? Can I go ahead?
Yes, sir.
Yes, sir.
Yeah. Now you are supposed to take totals of both these columns, capital profits and revenue profits. And by the way, do we have anything else other than these two? Let me see. Yeah, that's it. There are no other reserves. Okay. Only these items are there and everything we have analyzed. Okay. Now let's go ahead. Yeah. So totals are basically 2,48,000 and 37,000. And this is supposed to be split between parent and non-controlling interest in the ratio of 60-40. So numbers come to 1,48,800 and 99,200. Revenue profits total is 37,000. Out of that, it is 22,200, and for parent, and non-controlling interest is 14,800. Okay. Now don't be in a hurry to go to step 2. Don't be in a hurry to go to step 2. I have one more working to be done here. I'll have to further split. This 22,200 into general reserve and P&L, because for my step 4, when I open multiple columns, I need detailed information, right? That's why I'm going to take one more split off here. Okay. So one is general reserve, second is P&L. So out of this 22,200, how much is general reserve? How do I calculate it? Is basically this into my share, yes or no? 60 divided by 100. Okay. Same way, P&L, if you see, it is 27,000 into 60%. So how did I get 22,200? It is basically total of these two numbers, 16,200 plus 6,000. Is that clear?
Yes, sir.
Hello?
Yes, sir.
Did you understand why we are doing this? We are doing this for a limited purpose of, in step 4, I need to give breakup of information regarding P&L, general reserve and all. There, for me to showcase numbers, I am preparing myself right now.
Okay, sir.
Yeah.
Got it, sir.
Yes. So it is 6,000 for general reserve and P&L 16,200. Now, if we are done with this info, now we can go to step 2. This is the reason why I have asked you to leave after P&L 10 lines. So I hope the space was sufficient for you.
Yes, sir.
Okay. Okay. So now let us go ahead to step 2. Non-controlling interest. Share of capital profits is 99,200. Share of revenue profits is 14,800. Total comes to 1,14,000. Okay. After that, cost of control, investment by parent in child. Please take from parents' standalone financial statements. It is 1,62,400 given there. And share of capital profits, what they've got is 1,48,800. Hence, there is a goodwill of 13,600. Okay. If you're done with cost of control, let me know. We'll go to 4th step.
Done, sir.
4th step, reserves for CBS. Be little cautious here. You actually have numbers, proper numbers here. You have general reserve and you have P&L. Okay. You have general reserve and also P&L. Parents' own reserves. General reserve is 1 lakh and P&L is 60,000 from your holding company standalone financial statements. Okay. Share of revenue profits from child. General reserve is basically 6,000 and P&L is 16,200. Okay. Just to give a breakup like this, we have done there itself. We have prepared it there itself and brought it here. Then you have capital reserve from step 3. You don't have anything here. You need not write also. You need not write. Please take totals. The total comes to 1,82,200. Is that clear?
Yes, sir.
Now we can go ahead. Step 5, CBS. So sundry assets, please see what all assets we have there. It is 3 lakhs and 1 lakh, 4 lakhs. Apart from that, we have got a goodwill we have taken there. Current assets is 2,77,600 and 2,45,000. So sundry assets is 4 lakhs. Goodwill is 1,36,000. Apart from that, you have current assets, which is basically 2,77,600 and 2,45,000. Okay. All put together, it is 9,36,200. If you are done, we will go to equity and liabilities side. Equity share capital only parent is 5 lakhs. Reserves for CBS from step 4. Non-controlling interest from step 2. Okay. Then you have creditors for 1,40,000. Automatically the balance sheet gets tallied 9,36,200. Please let me know once you are done. We'll move to next question.
Yes, sir. Done, sir.
Yeah. So fifth question. Balance sheet as at 31st March 25 is given. Equity shares of 10 each fully paid. Reserves, creditors and P&L account. Assets, sundry assets, 70% shares in S Limited at cost. Stock, these numbers are slightly, to be corrected. Alignment issue. Stock and debtors, and then cash at bank and preliminary expenses. These are the items what we have. Okay. Now, Hero Limited acquired shares of RCB on 30th June 24. On 1st April 24, RCB Limited's general reserve and P&L account stood at 60,000 and 20,000 respectively. No part of preliminary expenses were written off during the year ended 31st March 25. Prepare CBS as on 31st March 25. Now, the most important thing in this problem is the date of consolidation is 31st March 25. Okay. However, date of control is in between the financial years. Date of control is on 30th of June 24. That means he did not buy in the beginning of the year and he did not buy at the end of the year also. He bought in between the year. Okay. So how do I do it is the question. When information is clearly given about the profit and loss which is earned during the period, how much is transferred during the period and all, it's very easy for us to do, because here he has stated 60,000 is 60,000 and 20,000 are general reserve and P&L balances on 1st of April 24. But that is not the date on which I have purchased. No, the parent has invested in child. The parent has purchased after 3 months of opening balance sheet date. So that means your values, whatever you have here, you need to observe. Opening balance of general reserve, what he has mentioned is 60,000. General reserve opening balance on 1/4/24 is 60,000, but it has become 70,000 by the end of the year. That means 10,000 is transferred by the subsidiary, by the child, from P&L to general reserve during the year. Number one. Number two, P&L, if you see, at the end of the year it is 50,000. At the beginning of the year it was 20,000. Okay, at the beginning of the year it is 20,000. So what you need to observe is, whenever you have dates in between the year, you will purely go by time-based apportion. You will purely go with time-based apportionment of balances. We will not go with numbers what are given there. So here, if you see, you have an opening balance of 60,000 and 20,000, which he has stated. At the end of the year, it has become 70,000 and 50,000. This analysis is something very critical for us. Okay, and then we will go ahead for other items. That's all. Okay. So what is new learning for you in this problem is, it is not about data of consolidation and all. It is about what if my data of control is in between the financial years. Okay, so that is what we are learning, and there are 70% shares which are held by S Limited. That's all. Okay, so let's get started. After this problem, I'll give you a note on general reserve transfers and all that stuff. Okay. Yeah. So date of consolidation is 31st March 24, but date of control happens to be 30th of June 24, and shareholding pattern is 70-30. Okay. Let's begin. Net worth analysis of child as on 31st March 25 with respect to 30th of June 24. Can I go ahead, please?
Yes, sir.
Yes, sir.
Yes, sir.
Yes. So equity share capital, there is no change, same 2 lakhs. General reserve, we are supposed to do a working note. P&L, one more working note. Okay. Apart from that, we also have preliminary expenses. Okay. Which always come on C side, which is 6,000. Okay. So after preliminary expenses, leave some 10 line space, come down, analysis of general reserve. Okay. Analysis of general reserve. Start with balance on 1/4/24 given. Okay. It is 60,000. Closing balance, if you see, it is on 31st March 25, it is 70,000. Okay. So current year transfer from P&L is 10,000 rupees. Current year transfer from P&L is 10,000 rupees, but I cannot tell that 10,000 is completely out of revenue profits because the date on which control happened is in between the financial year. Okay. If he has specifically stated that this 10,000 is transferred out of revenue profits of the current year, then you can tell that it is out of revenue profits. But he did not give you any specific information at all. Hence, what we would do is we will take it on a time proportionate basis. For the first 3 months, it's assumed that it is transferred from capital profits, and the remaining 9 months, it is assumed that it is transferred from revenue profits. Now you may get a doubt, sir. Transfer from P&L to general reserve will happen only once in a year. No, sir. There also you need to assume that transfer from P&L to general is a continuous process. Okay. You need to assume that it is evenly distributed, evenly transferred from P&L to general reserve throughout the year. That is one more assumption which we need to take. All these assumptions I'll tell you at the end of the problem. Don't worry. Okay. So this 10,000 you're supposed to split and show now. Okay. So how do I take it? It is for 3 months and 9 months. For 3 months and 9 months, I'm going to take. It's going to be 10,000 into 3 divided by 12. Same 10,000 into 9 divided by 12. Okay. So it's going to be 2,500 which goes on C side and 7,500 goes on R side. Is that clear?
Yes, sir.
Next. Analysis of P&L. Opening balance on 1/4/24 is given, which is 20,000. This goes to C side only. Closing balance is also given to us. Closing balance given is 50,000. Okay. And 10,000 is what's transferred during the period. Okay. 10,000 is what's transferred during the period from P&L to general reserve. Again, you should split this and show. Okay. Same way for this 40,000 also, you need to split it and show how it was earned. Okay. Is that clear, people?
Yes, sir.
Can we go ahead? Everybody?
Yes, sir.
Yeah, Monica.
Uh, yes, sir.
Any doubt?
No, sir, not a doubt. I'm just copying it.
Okay, fine. Go ahead. No issues. Go ahead.
Yes, sir, we can go ahead.
Now, if you look at both these analysis, you have multiple numbers here on C side. C side numbers are for general reserve 60,000 plus 2,500. And on our side it is just 7,500. Okay, in general reserve analysis. Same way P&L, if you see, it is 20,000 minus 2,500 plus 10,000. All put together, it is 27,500. And on our side, it's going to be minus 7,500 and 30,000 positive. Both put together 22,500. This is what figures we are supposed to take there. So be extremely cautious as you pick the numbers. Please be specific in mentioning how you are taking those numbers. I would suggest you to take, if you still have space on the right side somewhere, okay, take total C. Total C is basically this plus this. Same way, total R. I'm talking only about general reserve here. It is only this. So total of these two is basically 70,000. Okay. Same way for P&L also, please mention. Total R, if you see, it's going to be minus 7,500 plus 30,000, 22,500. C is going to be 20,000 minus 2,500 plus 10,000, 27,500. Okay. So these are the figures which you are supposed to take there. So general reserve on C side is going to be 62,500. Okay. R side it is 7,500. P&L it is 27,500 on C side. R side it is 22,500. Is that clear till here?
Yes, sir.
Yes, sir.
Now, so with this, we are done with all net worth items for the child. Okay. And total of your capital items comes to 2,84,000. Total of revenue items comes to 30,000. Is that clear?
Yes, sir.
Yeah. These totals are supposed to be split between parent and non-controlling interests in the ratio of their shareholding pattern, which is 70 and 30, if I'm not wrong. Yes, 70-30 is the ratio. So the values come to 1,98,800 for parent, and non-controlling interest is 85,200. This is out of 2,84,000 of capital profits. Same way, revenue profits total is 30,000. Out of 30,000, 21,000 is on C side, on parent, and then 9,000 goes for non-controlling interest. Since we have two items here, two categories of reserves, I'm supposed to further split this 21,000 into general reserve and P&L for my step 4 purpose. So general reserve is going to be 7,500 into 70%. P&L is going to be 22,500 into 70%, which comes to 15,750. Is that done till here?
Yes, sir.
So if you're done till here, we will move forward. Okay. Second step is non-controlling interest for CBS. Share of capital profits for non-controlling interest is 85,200. Share of revenue profits is 9,000. Total comes to 94,200. So most important thing what you should understand is in the entire consolidation, the first step alone is very critical. If you do that correctly, everything else will follow in place. If that is done, cost of control, investment by parent in child is 2,60,000, and share of capital profits is 1,98,800. You have a goodwill of 61,200. Over, people.
Yes, sir.
Yes, sir.
Next, reserves for CBS. Please pick numbers cautiously. Parents' own reserves are to be taken. Parents' own reserves are 1,50,000 and 70,000. General reserve and P&L. And then share of revenue profits is 5,250 and 15,750. You don't have any capital reserve. So total comes to 2,41,000. If you are done with step 4, we'll move to step 5.
Done, sir.
Yes. Assets, please take. We have fixed assets given there. It's not sundry assets given. Oh, okay. Sundry assets only, fixed assets. So it is 3,70,000 plus 1,45,000. 5,15,000. And then you have a goodwill of 6,12,000. Then you have multiple other assets. Current assets are there. Okay. You have stock, debtors, cash at bank also. So you can take all of those individually. Stock, it is 1,75,000 plus 1,89,000. Okay. Then you have debtors 55,000 plus 30,000. And then you have cash, which is going to be 50,000 plus 10,000. Okay. All of this put together comes to 10,85,200. Then equity and liabilities, equity share capital, only parent company, only parent to be taken. It is 6 lakhs here. Reserves for CBS is 2,41,000. Non-controlling interest is 94,200. Okay. And then you only have creditors, which is 1,50,000. Total of all those. So with this, we are done. Over, people?
Yeah, sir.
Yes, sir.
Okay. Now, let's write that note alone. Let's write that note alone. Note on hidden general reserve. Transfer. Okay. While reading the problem, check if the balance in general reserve on date of control is the same as on date of consolidation as well. If it increases, it indicates there is a transfer of profits to general reserve during the current year. Even if no info for the same is mentioned. Okay. If it decreases, we will see these problems about decreases in the next coming problems, but I'll just make you write the note here itself. If it decreases, it indicates that it was used for some purpose. In this case, info would be definitely given in the question. Info would be definitely given in the question, either directly or indirectly. Is that clear?
Yes, sir.
Yeah. So this is with respect to note on hidden general reserve transfers. Next, note on transfer to general reserve evenly throughout the year. When there is a transfer of profits from P&L to general reserve, and the question does not, please ignore the dog barks, and the question does not specifically mention from which profits it is transferred. Okay, it is transferred. That is, i.e., out of pre-acquisition or capital profits or revenue profits. Out of capital or revenue, it is assumed that the profits are transferred from P&L to general reserve evenly throughout the year. It is assumed that profits are transferred from P&L to general reserve evenly throughout the year, and hence profits will flow from capital or revenue based on the date of control. Clear?
Yes, sir.
Yes, sir.
So any further explanation you want? I think this is sufficient. Beyond this, it would not be required. So we'll stop here. From next class onwards, we'll have new adjustments in the basic problems itself. That is, when we have only one subsidiary, there is one child, what sort of adjustments can occur inside that is something which we will see from next session onwards. Okay.
Okay, sir.
Thank you, sir.
1 second.
Thank you, sir.